How do you pay taxes on your Social Security payments? Meaning you're getting Social Security. How do you pay taxes? How do you withhold money for the government? That's what we're going to be talking about today. Yes, we are talking about Social Security again. There's my co-host, Tony Shore. Tony, we're talking about paying the taxes that you owe on Social Security.
Yep.
We're not talking about whether or not it's taxed, because we did an entire show. And I think you were the one saying that it's a double tax. We shouldn't be paying tax on it. And I proved you wrong and said, yes, in fact, it is not a double tax. Social Security, I mean, you can make the case. It could be argued, but we do not want to talk today about whether or not Social Security is taxable, because we know it is. What we want to talk about is, all right, I accept the fact that I owe taxes on Social Security. How do I pay them? How do I go about that? It's a common question that you'd be surprised people are asking me.
So people ask you how to pay tax on Social Security. Shouldn't we be doing a show called How Not to Pay Taxes on Social Security? Isn't that the goal?
I think that is the goal. So we'll get to that at the end.
Okay.
We'll get to that at the end.
Okay.
But it is taxable for some. So you have to know how this is calculated. And we've done shows on this, on how to calculate it. And it's about understanding what's provisional income. Basically, whatever your income is and half your Social Security benefit, that's what is countable as income. And if you're above a certain amount, then you're actually going to pay tax on Social Security. But I will say this, if your only form of income is Social Security, you're not paying tax. So there's a little tidbit for you. If your only source of income is Social Security, you don't pay tax. That's for you and your spouse. And how that works is this. Let's say you're at max. I think the max is over $4,000 a month in Social Security right now. Let's say you're at the max and your spouse is at the max. That's $8,000 a month you're making, right? This is right. So you take that and you multiply that by 12, and now we're at over 90,000 of income. And you take your standard deduction, and now you're back below. And the way the tax works on Social Security, they only count half. They only count half of your Social Security benefit to determine if it's taxable. So you might find, you'll always find that if your only income is Social Security, you're not paying tax on it, because the tax bracket is $44,000 or $32,000 or $24,000, depending on if you're married or you're single. If you make above that, then they start taxing Social Security. But for many people, none is taxed. No.
Yeah, people say those limits are kind of low, like wow, or wow, 44,000 is kind of high. How am I not going to pay taxes? I'm going to make over that in retirement. But they're thinking about, but that's adjusted gross income, right? After your standard deduction.
It's provisional income. So say 32,000 for a married couple is the limit for half of your benefits tax. Now those weren't adjusted with inflation, so there's no cost of living. So those brackets are from the 80s. We did a show on that,
right?
How to fix it, and we talked about France and how you love France.
Yeah. But
watch that show. But I think what people don't realize is only half of it is tax is counted toward that when it comes to Social Security taxation. So 32,000, that means you can have 64,000 of Social Security. So that's how it works.
Sure.
So, but beside the point, at some point you're going to say, all right, I need to pay tax on Social Security. I want to pay in advance. How do I do it? And I filed years ago. I forget. I don't remember. Are they withholding tax from me? I don't even know. And people just don't realize that. They don't, because who looks at their Social Security statement? You don't really look some people do, but if you look at it, you'll see, all right, here's what my benefit is. All of a sudden, why is $160 something coming out? What is that all about? That's Medicare. That comes out of your Social Security.
Right.
And then you have your net amount that comes to you. You can actually have taxes held from that. So how do you do that? That's what we're going to talk about. It's real quick and real simple. If you want to withhold taxes from your Social Security check, you need to use IRS Form W-4V. Well, let's and here's the link for those that are watching on YouTube. Let's show it on my screen. Let me share my screen. We're going to go through this, Tony. That's how exciting it is. shows no we we go. So can you see my screen?
No, not yet.
Not yet. All right, let me share my entire screen. Okay. Here we go. So, here we go. Request to withhold taxes. This is ssa.gov. Okay?
Okay.
Says you can submit a request to pay taxes on your Social Security benefit throughout the year instead of paying large bill at tax time. So a lot of people get a refund. That's because they're giving the government their money during the year. They're prepaying the taxes. So if you're getting a refund, you're only getting your own money back. If you owe money at the end, that means you didn't withhold enough. So you might say, I don't want to owe money. How do I give them money a little bit at a time? You can have your Social Security benefits taxed as before you get them. And this is what you do. And here they show you, it's free, no tax on your Social Security income. 50% of your benefits will be taxed if you earn more than 25 as an individual, 25,000, or 32,000 as a married jointly. But again, that's only half of your Social Security benefits. So you can have 64,000 of Social Security income as a joint couple, and you're not paying tax on that. Okay, so it says all you got to do is mail or fax us Form W-4V. So let's go to Form W-4V, Tony.
Oh, you got it right there for us. I love it.
Voluntary withholding request. All right, so you use this for unemployment compensation and other things, but let's scroll down. These are instructions because, you know, everything's so easy with the IRS. You need multiple pages of instructions. Look at it's a quarter of a page. So don't be intimidated by this.
Yeah, it's true.
It's all you put is your name,
It's pretty simple.
Social Security number, your address, your and then it says there's a checkbox in 6 that says, I want federal tax withheld from my Social Security benefits. And then they give you 4 choices. You only get 4 choices: 7%, 10%, 12%, or 22%. So you can't write in, I want $100 a month taken out, or I want 50% withheld. It's either 7, 10, 12, or 22. Take it or leave it, or 0, because you can have nothing withheld. That's the default, right? So for the default for people is they don't have Social Security taxes withheld, and then they get a tax bill and they said, how do I do this? How do I prepay my taxes? I want some taken out of my benefit. This is the form you do.
So the reason I was trying to think, why would I ever want to fill out this form and have them withhold money from my Social Security checks? But you're saying if you're in a situation where you're going to owe a lot of taxes, you can maybe pay throughout the year this way.
A lot of people want to manage their tax returns to be 0 or close to, or they want to get a refund. Most people that I deal with don't want to have to cut a check to the government.
Right.
They get a little antsy about that. So how can you do that? Well, you can prepay quarterly. You could send a check anytime throughout the year to the government. They'll accept it and count it toward your tax liability. Or you can have them do it for you by withholding taxes from your Social Security check. And it's an easy way to do it is simply fill out this form. That's it in a nutshell. You just fill out this form, you mail it in or fax it in. You could drop it off, I suppose, at the local office. But this is it. This is the only thing you fill out. The rest is all instructions and paperwork. It's just this little tiny quarter of a page form that you submit, you sign, and there you go, and let them process.
Wow.
It. Pretty straightforward, right?
Yeah, and you find that on ssa.gov.
Yes, ssa.gov. But the form is an IRS form, so you find that on the IRS.gov.
Oh, okay, IRS.gov. Okay,
Yeah.
Yep.
So you can't call up and say, hey, start withholding taxes. They make you fill out the form and sign it.
Sure.
So people get a little concerned. Well, how do I do that? I don't remember if I told them to withhold taxes or not. Don't fret. It's a simple form, easily problem solved. But it brings up the issue, which is taxation on Social Security. People don't like it, but it's a major consideration when you're taking it. How much do you want to withhold? Do I want to? And by the way, when you're withholding taxes, say you choose to have 10% withhold or 7% withheld, that's after the government takes out their Medicare pound of flesh, right? So they take out Medicare and Part D, if you're getting that taken out for drugs, then they tax whatever's left. Okay, so for the math geeks in there that really want to get into it, you might say, well, that's not the right amount. It's because they're taking out the Medicare stuff first. But it brings up the important question, which is what you said: how do you not pay? And I want to bring up the idea of taxation on Social Security should be a factor as to when you file. For most people, when they do a Social Security maximization report, which I do for free for a lot of people, that they say, hey, I want that report here. I'll put a link up here for those that are interested in that. It says here are the different options. You can claim it at 62, and then your spouse can claim it at 67 or 70, whatever. A lot of people just base it on, well, how much am I going to get? What they don't plan for, because it's a little bit more complex, is how does my taxation get impacted? And I want to talk very quickly about that because it's an important part. If you're planning to withhold Social Security taxes from your Social Security benefit, or your taxes from your Social Security benefit, you've obviously already filed. So this is beyond you. But if you're sitting here thinking, well, I haven't filed yet, I was wondering how I can have taxes withheld, think twice about when you filed. And here it is in a nutshell, Tony. If you are planning to file at 62 or 64 or 65, you may consider with delaying Social Security until 70 for tax benefits, because at any point, no matter how much income you make, 15% of your Social Security benefit is not taxable. So I'd rather have $100 come from Social Security than $100 come from a pension or from an IRA withdrawal. An IRA withdrawal is 100% taxable. $100 from Social Security is 85% of it is taxable, or none of it. So if you think about it, if you're 65 and saying, I'm thinking about turning Social Security on, you may want to delay till 70. Well, Dan, what am I going to do for the next 5 years? Take your income from your IRA, draw that down, and then when you hit 70, then you turn on at a higher rate Social Security. You're getting much more money, and that's not all taxable, and it's lifetime, and you get the cost of living, and you get an 8% increase for delay from full retirement age to, so at 70, that's 8% a year. So there's a lot of benefits to it, but taxation's a big one. I'd rather have $100 from Social Security than $100 of income from anywhere else, besides a Roth IRA or something like that, tax-free. So that's the major consideration that people don't factor in, is the taxation. You always want to maximize your income and decrease your taxes.
Yep.
So Social Security is the one way you can do it.
Wow. Well, and that's great. I mean, obviously, you can strategize with Social Security, like you said, when you file makes a big difference, and everybody's situation is different. You have to look at your time horizon, your longevity. Some people don't have a very good history of longevity in their family. Some do. And so you really do have to weigh. But I get, using money from here instead of here so this can grow. Let your Social Security grow. I get that. And you've talked about that before.
Yeah, we've
But
done a
this
show
isn't.
on that.
Yep.
I'll put it up here. We did a show on that very strategy of delaying
Yep.
Social Security.
Yeah, and so it is nice that only 85% of Social Security can be taxed. So at least you have the 15% tax-free in there. You mentioned that. I want to reiterate that because that's always a good thing. I mean, it's, until 1984, they didn't tax Social Security, right? We've talked about that.
Yeah, right. It was never supposed to be taxable, and then they started adding, and now who knows if they're going to change it again. But at this point, 15% is tax-free no matter your income, so you might as well use it.
Yeah.
That's quite powerful. People don't realize the power of not paying taxes. And by the way, you're paying your ordinary income tax rate. You're not paying 85% taxation.
Right.
Rate.
No.
85% is taxable at whatever your income tax rate is.
Yeah. Good clarification.
So if you play your cards right and you maximize Social Security and you get to the point where your only source of income is Social Security, even if it is extremely high relative to what you would have gotten 5 years earlier, that's a good play, taxation wise, longevity wise. Again, though, everyone's situation is different. So you got to factor in life expectancy and your other income sources. But that's the bottom line. You got to know that taxation is a big part of Social Security. And before you claim Social Security, you need to know what your tax plan is for Social Security. So it's a very, very important lifetime decision. But again, if you're already claiming and you just wanted to know how to pay tax on it, fill out Form W-4V, right?
Right.
Simple.
Well, here's the bottom line on Social Security.
God bless Social Security.
That's the bottom line.
Absolutely. Well, Tony, that was simple. I think people, no one likes to pay taxes, but if you got to, they should make it as simple as possible.
Right.
I think what we showed today, it is pretty darn simple to do. Even my kids can do it. And speaking of them, we'll bring them on. Have a good show. Have a good week. We'll catch you next week, everybody.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Wendol nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.